Hey, welcome back to BlockIQ. In today's episode, I want to explain the emerging trichotomy now between digital capital, digital utility tokens, and the emergence of decentralized AI, the combination of which is opening up what we now are calling digital economy. Now, I felt this is actually very important because it used to be a dichotomy between Bitcoin and the rest of the digital utility tokens. But now, in addition, we have a third brand new kid in the block, which is AI, and how is actually playing increasingly a pivotal role in anything to do with blockchain. So let's jump into details, explaining the intricacies between each one of these components and why, as an investor, we ought to have a deep dive understanding as to what they all could mean in this brand new digital economy. Now, starting off with the very first sentence at the top. Currently, there is roughly $3 trillion market cap, or what we call in blockchain terms, total locked value on chain. So this is the amount of capital that's been invested on chain in each of the blockchains within the entire crypto industry. So that's the current market cap worth, if you'd like, $3 trillion. $2 trillion, just above $2 trillion belongs to Bitcoin. So you can see that Bitcoin is hovering just over 2/3 of the entire crypto industry market cap, and it's set to grow. So that's why I placed Bitcoin in the first left-hand side of the slide. It is, for me, that digital capital. What I mean by digital capital, it means finding a digital asset that can resist currency devaluation, currency debasement, the excessive money printing from governments, and the entropy, not just looking at it within the auspices of finance, but all types of entropy and chaos in the world. Wars, conflicts, geopolitical issues. Now we have this trade war tariff that's been instigated by Trump and all the rest of it. So we need to find a hedge. What is that ultimate hedge against all of that chaos and entropy, currency debasement? For me, it's Bitcoin as that leading digital capital. And also, it has some rather interesting attributes, which I've already explained in many of my videos, which is all the more reason why you ought to subscribe to this channel to learn more. It's only going to be 21 million coins in existence, is governed by math, code, and electricity, computational power. And this is what I mean by Bitcoin being that proof of work consensus mechanism, which is one of the two types involved in blockchain. So proof of work is the amount of computational effort that's brought into mining new tokens, new digital tokens, without cheating the system, without creating or exerting influence over it. This is completely neutralized way of mining and minting new tokens in the blockchain, and that is Bitcoin. It is that ultimate proof of work blockchain there is in human history, which is in stark contrast with the other type, which is proof of stake, with the example being Ethereum, Solana, and in fact all of the other thousands upon thousands of digital utility tokens. For me, that is the big difference. And proof of stake is really governed by the amount of holdings that you have invested in that blockchain network, like Ethereum, Solana. And also it's governed by what they call the governance committees, the actual voting regime, which is fundamentally the security firms managing these proof of stake blockchain network systems like Ethereum, Solana, which means that, like any company CEO, they can make arbitrary decisions governed by the collective, by the stakeholders. So you can kind of compare the corporation stakeholders by the amount of people staking on the crypto blockchain itself. So that is the comparison or the parallel. Corporate shareholders versus the crypto stakers, the one that actually stake their holdings, who've actually invested the greatest amount of tokens on the system, which is quite discriminatory, at least from my own personal perspective, and which is why I'm not at all a believer in staking tokens in order to get favorable yields. That might be of interest to you, but you need to do your research. You need to really dig deep under the covers as to the setup of that blockchain regime under this proof of stake consensus mechanism. And finally, I'd like to round off the difference between what is a commodity and what is a security, because it is important to have that understanding, because depending on the jurisdictions that you live is governed by the commodities laws and the securities law. So the commodity it's a commodity without an issuer, without a company or a CEO that imposes its own rules, its own balance sheet, its own management team in order to issue and manage tokens. So ultimately, it's Bitcoin in the crypto landscape, but there are other types of commodities in the analog world. Whereas a security is a company CEO, it's a management team that has all of the rules, all of the governance and influence over that blockchain system. So you've got Ethereum, you've got Solana. These are examples of what we call smart contract blockchain systems. So these are like programmable blockchains that enable creating software programs in order to manage things like how many tokens can be issued, what is the threshold amount, the cap limit, what is the rules and instructions for managing, let's say, a legal contract or a type of use case that's been programmed onto that specific blockchain. So take the example of, let's say, when you stream music online and you want to manage the amount of royalty fees that come in, well, you can create a smart contract that manage that entire process in order to manage royalty fees based upon the consumption of the streamed music online. This is what I ultimately see as an example of a digital utility which is growing, and there's other types in there which I'll touch on later on. So that is for me, what are the differences between what is a commodity, what is security, what is the difference between the proof of work consensus mechanism versus proof of stake, and why for me Bitcoin is that leading digital capital, because I need to find an asset that I can invest in that can act as a hedge, as I said before, against entropy, against currency devaluation, and not just to worry about preserving my wealth in the asset class, but also grow it in the long term. So when I reach the age of retirement, let's say, I like to be able to enjoy the capital gains as a result of my efforts of holding on to that wealth in Bitcoin. And so digital capital for me is the ultimate store of value technology, which is Bitcoin. Now moving over to stablecoins. What are stablecoins? Are like the digital version of any fiat currency. What is the main example? Well, it's Tether, which is the US dollar pegged stablecoin. It's the largest private issue, which actually has the majority of the 220 billion TVL or TLV or market cap invested in the stablecoin, because the US government is trying to find ways to continue to dominate its US fiat currency. And one way they've identified doing that is to team up with Tether to issue these Tether stablecoins throughout the entire ecosystem. And for me, that is like a perfect entry point into the payment rail system, because stablecoins are quite advantageous in terms of how we can perform cross-border payments quite seamlessly on the eyes of the user at a fraction of a cost and at a fraction of a second. Because if we compare that with how we used to do it, or still do it to some degree, in the analog fiat world, if you think about those bank-to-bank transfers, or when you make credit card payments, and you have to worry about the hefty transaction fees like 2.5 to 3%, that is quite expensive. Whereas if you do the same under stablecoins regime, well, we're talking about just a few pennies or cents worth, and done in a matter of a few seconds, if not fraction of a second. So it's instantaneously settled. Rather, if you do it on the credit card or bank to bank, it takes quite a few days to settle, in addition to the hefty fees, as I said before, they need to be worried about. So for me, ultimately, stablecoins are not to be confused with digital capital, which for me is Bitcoin, but rather use stablecoins as that medium of exchange currency for your day-to-day expenses. So that is where the wind is blowing. So that is stablecoins, and why we shouldn't use it as a long-term investment vehicle. Just use it for like your checkings account to pay those expenses that you need to worry about. So that is stablecoins for me. Moving over to real world assets, which for me are ultimately digital utility tokens. You can think of any analog asset that has that economic value attached that can be transposed and converted into a digital utility token under the real world assets tokenization. If you think about premium real estate, property, arts and collectibles, even other commodities, precious metals, even your favorite basketball team, football teams, those are perfect candidates to be converted as a real world asset onto the blockchain. So people can participate, can trade, can manage those tokens in order to speculate and make some money at the end of the day. So real world assets tokenization is growing quite extensively, because there are predictions that by the end of this year, we can see 50 billion US dollars of on-chain capitalization in the real world assets domain. But there are predictions that it could exponentiate into $10 trillion by the end of 2030, which is a handful of major consultancy firm estimates, mind you. So what I'm trying to say here is real world assets is growing, and a few examples I've placed here is just a few out of hundreds, if not thousands, of real world asset coin projects that are emerging. So if you think about tokenizing, let's say, US Treasury bills on the blockchain, well, Ondo Finance is the leader in that space. If you're thinking about how to tokenize those commodities, those precious metals like gold, well, you got PaxG, which is the leader in the tokenized commodity space. If you're thinking about, well, how can I tokenize equity stocks, right, which is another category under the real world assets tokenization space, well, you've got an example called Exodus Movement that are currently the leader, i.e. the most that invested in the tokenized equity space. So these are just a handful of ideas, a handful of use cases, and you can see the potential of this list is growing quite substantially, or that is at least the expectation, mind you, from these consultancy firms that have placed these exorbitant estimates, $10 trillion estimate by 2030, which we're in 2025 is only around the corner. So I don't think this is at all unachievable, right? So this is very, very interesting prospect for investors to start looking into if they feel that they want to invest in real world assets tokenization, but do it under a shorter time horizon. Maybe this could be an interesting category for you to investigate. And then this leads to my last point about decentralized AI. Now, this is like the new kid of the block. Like I said, it used to be just Bitcoin versus the rest of the digital tokens. Now we've got a third component, which is decentralized artificial intelligence, and why we are seeing it more often than not as that symbiotic partner with blockchains. So for me, the ultimate use case in decentralized AI is for AI to team up with blockchains and to help transact and monetize those transactions more efficiently, quickly and cheaply than ever before, rather than the humans having to drive those transactions from their wallets, crypto wallets on the exchanges fundamentally. Well, AI, through autonomous AI agents, they can do that seamlessly on behalf of the users themselves. So this is like, for me, the ultimate king of all use cases that I expect to see under this decentralized AI component. So as a summary, we are seeing the actual crypto industry, it's quite buoyant. The future is certainly bright. There are lots of potential use cases between each one of these three areas: digital capital, digital utility tokens, and decentralized AI. And this is set to grow. It's set to really enable investors to invest in the space, because we're going to have this regulatory clarity. In fact, the US and a few other countries, again, I made some videos on that, which you can subscribe to my channel to learn a bit more and watch through those videos. We are seeing regulatory clarity frameworks imposed and settled in the various jurisdictions, which will enable those fintech players that will need in order for them to implement these three category types of crypto in this industry, as well as bringing those, the capital with it and the top talent to make that happen. And this is the last point I'd like to make, because I have explained it in another video, where I encourage those Gen Zs and the future generations after them to start thinking about investing and specializing their talent anything to do with crypto, blockchain technology and AI. So blockchain and AI, they ought to start investing their talent, because we're going to be seeing an increasing demand for blockchain technology, blockchain use cases and artificial intelligence. So if you place your bets, specialize yourselves in those two areas, well, you're going to be safeguarding your buoyant future. As well as for the rest of us, we need to also get to the habit of using ChatGPT to be able to live side by side with that technology, even for our day-to-day. For instance, this slide that you're seeing, this is as a result of the inquiry that I've tapped into ChatGPT. It's managed to spit out this slide. You can see there are some small little errors, but I mean, that's perfectly understandable, because it's still a brand new technology where I would expect for it to mature over the months and years in the future. So that is the message I'd like to leave you today. If you enjoyed, incidentally, today's episode, please don't forget to hit the like button, to share the video, to colleagues and friends. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.